All right. Good morning, everybody. So we're green on the screen around the world, but we do have some rate decisions coming out of Europe. And then there's going to be the start of some jobs numbers today that will finish tomorrow, which is likely to have a pretty lasting impact on the market. So approach this with a little bit of caution. I've seen already a few different places coming out and saying the bottom is in. Tread lightly with that. I'm not saying they're wrong, just there's still things that could go wrong before we can finally make that assessment. But seeing what's happening in yields and the front end of the curve and moves we've seen in the dollar, I'm leaning in that direction. So we can see Japan is up the least, then the Dow, the S&P, the NASDAQ, and the Russell is up the most, 1%. That ties us back to January, short covering rally, dash for trash, when we had that really nice start to the new year, and how it bled out from that into junior tech, which continued to rally. And then they covered the banks, bailing them out around March. And then we had the AI explosion, right? Just, it was a step-by-step bullish process to put us up into those highs earlier this year. It always starts somewhere. In January, it started with the small caps. Hong Kong passed that, and we've got some Europe, the Euro stock 50 at 1.8%. So it's looking pretty good, especially when you think about their rate decision, right? Let's see, European Central Bank Lane is out there chipping teeth, but we've got Bank of England rate hike, and then they're going to do their talk, and they got a press conference with Governor Bailey. So a lot coming out of Europe today is kind of the takeaway, and yet they're up pretty good, right? So you got the UK down a bit to 125 versus that 189, but I mean, this is looking good all the way around. I like it. All right, so we can see initial jobless claims. Now, tomorrow we're going to get non-farm payroll, and I mean, that's the biggie, right? NFP, non-farm payrolls, that's the one. But initial jobless claims is important. It absolutely matters. This one can move things. That's at 8:30, and then we're going to get factory orders, which I don't want to dismiss. Those absolutely have merit. They just pale in comparison, right? It's kind of like saying, the Ford car you have is a great car. It's fine. It gets you where you want to go every day. But as soon as you park it next to something like a Lexus, maybe your Ford ain't so nice no more, you know? Yeah. Car analogies this early in the morning. So we can see the anticipated impact and how everything is just lit up all through this Bank of England monetary policy. It's not Bank of England. I'm misspeaking there. It's not all of it. So just a broad blanket. We have some markets closed, including Japan. It's a culture day. It's all day. So we'll see a lack of their participation. And we do have additional auctions today at 11:30. Now, when we tie all this together, there's a lot of moving parts here for the day. to really kind of keep track of. Laying out these levels helps, right? So here's your spot gamma levels, the SPX and the ES. Somebody reached out to me yesterday and said, those levels are really far off. Are you sure that they're today's? Well, yes, it has the date there, so I know when it was updated. But even besides that, these are not trades, right? They're gauges for how market makers are going to behave. Are they going to sell into selling, buy into buying? Well, how far away are we from the volatility trigger? How far away are we from zero gamma? Are we above it or are we below it? Those are the kind of the pieces that matter, not, oh, well, we're looking to hit this level or not. Call walls at 44. Sorry, I should have scrolled down there a little bit. Put wall is at 4,000. So that covers the ES and the SPX. This is for the SPY. For those of you like me who trade the NASDAQ, there you go. And the idea here is just capture a screenshot, right? Either use the button on your keyboard or use something like Snagit, which is what I use, but either way. Now, you know, this is like $50 a month to use Spot Gamma. And I don't complain, you know, whatever. But if I can share it a little bit, I feel like I get a little more out of it. And it saves you from having to spend $50 just to get those lines every day, you know? Eight o'clock, 8:30, 10 o'clock, 10:30, 11, 11:30. It's a full house. It's a full day. And like I've said through most of this week, you know, it wouldn't be a bad idea to just take the whole week off on an FOMC week. There's certainly precedent for it. So I'm not saying that you shouldn't trade during an FOMC week, just that if you're already struggling, if you're already, you know, finding it hard to be consistent, trading in a week like this, where everything that you would normally use is janky and not doing what it's supposed to do, it just throws you off, right? It makes you start second guessing your system, your strategy, your approach. We can see the dollar is down very close to 106. We were above 107 yesterday. So this is a good start, but we have a lot of work to do in that regard. 10-year also down. So seeing both of these down like this is I really felt good about it when I seen it this morning. My issue is we're holding this range in the 10-year. The dollar broke that range and headed to the downside. I want that breakdown here. So we don't have it yet. And US dollar Japan looks more like the 10-year than the Dixie. Right? Because US dollar Japan is holding in that same zone from this low pivot. We haven't gone back below it, just like with this low pivot. Sure, we went below it a little bit, but we're still holding there, right? Not the Dixie. It completely expanded the entire range down 100%. So the threat here is that the DXY could flip and come back up, and these two are just waiting for it to do that. Or they kind of get dragged behind kicking and screaming and then suddenly whip to the downside. So seeing both of these, the 10-year and US dollar Japan, suddenly jerking to the downside fast, that would we'd certainly feel that in the markets. So that's kind of what I'm watching for. These three, they don't need to be perfectly in sync, but I don't want them to decouple any worse than they already are right now. Taking things on the other side, let's swap this NASDAQ out. We kind of need something better. Put some crude in there. We got bonds up, stocks up. Generically speaking, we can just say the S&P is stocks and the ZB is, quote, bonds. It's close enough and good enough. Stocks and bonds up together. Risk parity is dead. It died with COVID. If one of these are going to give out, which one is it going to be? Where's the money going to flow? right? And that's kind of the whole argument. If they're piling all of the money into one location, is there still going to be money for the other location? They can chew bubblegum and walk at the same time. So, you know, it's not an either or proposition, but we have seen before where flows will just be dominant in one direction and it just kind of dries up everywhere else. So that's what I'm watching for here with bonds. We don't know yet. So far, so good. Just want to keep our eye on that dynamic. Crude is up off of the lows set last night, but it has a long ways to go before we would even consider it a turning point. You know, bonds have been beaten down for a while, and you can see this morning how they broke outside of yesterday's range. They're really looking good on this advance to the upside. And so when we come back to crude and we see that it came up off of that low, it's not even back to the high of yesterday yet, let alone, you know, through the high and out the other side of it. And you can see how we're struggling with that 50% mark. We got to get above that before we even have a discussion of anything else. So yeah, crude is working it out. It's not done yet. Let's see if we can, you know, continue this advance in crude. And gold, same thing, sitting inside of yesterday's range. Now, we would expect gold to go up with US dollar Japan going down, but we're not going down, right? We're just kind of sitting there, and we're just kind of sitting here now. So let's see what we get out of that. And that brings us into the weekly chart here on the right-hand side. So we are still inside of last week's price. We're looking for an inside day breakout. We're above the 50%, 4206. Once we break through the top of Friday's or last week's high, then we'll focus on 43.75. To get there, we've got some moving averages. We're above both of the 50s on the weekly, so that's a good start, but we still got the 10 and the 20 overhead on the weekly. If we do fade back this morning, we really want to see it hold above that 42.48. It shouldn't be too hard. We've got 42.43 as a 10-day moving average, and we're flirting with the 20-period moving average right now on the daily. We do have an MDP. This is a missed daily pivot. It doesn't really have a lot of weight today. It will be more valuable to us tomorrow. But the fact that we have it is a good start. But the next thing of concern is the distance from the weekly pivot point. That's a long ways off. And I don't have a number, right? I just have a distance. We don't want to outrun the weekly pivot point. We don't want to get, quote, too far away. But how far is too far? And at what point do we say we're too far away? I'd say that we're pretty close to that level now. So could we continue to go to the upside? Yeah, but think about a bungee cord jumper. I think we've all seen a video of that at some point. And as they near the edge of the stretch, they start to get to that point where the move is slowing down and almost stopping before moving the other direction and accelerating in that move. So we could move higher, but we're going to expect that higher move to start to slow down a little bit, maybe be a little more janky and choppy. And want to focus on our key pivot points for the turning. The thing is, it doesn't really have to fall back down. It just needs to stop going up. Two different things, right? So volume this morning, even with Japan closed for holiday, we're at 122. It's well within the norms. It just kind of highlights that there's a lot of volume today. There's been a lot of trading activity. And if we think about the IB, the initial balance, and how far we've come since that initial balance, we would look at this and we would say the work is done, that they've accomplished everything that they needed to accomplish for the day. It's a pretty odd concept to think of, right? But this point of view came from Dalton and or Peter Resnicek. You kind of put those two together because Peter learned from Jim Dalton, and I don't know where Jim learned it, but it doesn't really matter. That if we think of the IB and a narrow Globex all night, it implies that they didn't get their work done and that they could come in at any time and do some trading to accomplish that work. But if we've already expanded a long ways through the pre-market session and through the Globex session, then it implies that they've already got all their work done and they have no reason to come in and trade more. They've traded what they needed to get traded. We had some really good two-sided trading here. This is fantastic. But we can certainly see where that ended. Ten-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We are back at the point of control. One more day down along that 4180 very likely would have brought that point of control down to the 4180. Instead, we left that zone. We made it through the shallow area here, and now we've cut through the pivot. Did we have another shallow area overhead? So from the volume profile point of view, there's really nothing standing in our way from going higher. We don't really have a classic shape, but if I had to put it into something, I would say it's a classic B, right? Consider this shallow and then the big zone. So a classic B. But mostly it's just a chewed up wad of bubble gum. And if we do get through this point of control and get up around these highs, we could start to fill it in a little bit, maybe this shallow area, and get a classic D shape. $42.71 VPOC from a little while back has been hit this morning. We cut through it like it wasn't even there. Earlier in the Globex session, we got near it without hitting it. This thing is done. We don't need it on there anymore. And as price showed, it has no weight or value or merit to us this morning. So we just get it out of the way. We do have a new VPOC from yesterday. So we're building a relatively decent stack of these underneath us. Just like we did on the last rally out, right? If you think about that rally, say from March, and how, we chopped about quite a bit. We struggled to finally get through there, but we were leaving those VPOCs behind on our way out. And we've still got a lot of them overhead to deal with. But we are building out a new set of VPOCs to start. We have expanded beyond the edge of the weekly expected move by quite a bit. The concern is that if we get too far away, they will buy into buying. And the reason is a lot of these bigger firms trade Friday to Friday SPX options. They'll put a straddle on one of those lines, the green line, the red line, doesn't really matter which one. And once we expand beyond that, they've got to get their deltas back in line. Their goal is to remain in delta neutral. Options have a liquid delta. It means it's changing constantly. But futures have a hard delta, just like stock does. So they will trade into the ES futures if their S&P options trade needs deltas, either needs them or has to take some off, right? Positive and negative deltas. So when we get beyond that level and we continue to go up, they will buy into it because of the deltas that they need. The problem is the more they buy, the more we go up. But the more we go up, the more they're unbalanced and they need more deltas and they go in and buy. And the more they buy, the more we go up and we get unbalanced. It can cause a volatility loop. Now, thankfully, it's from Friday to Friday to Friday. So, you know, it doesn't turn into this crazy month-long process, but it can get out of control. There's a starting point, usually around 2 standard deviation. This is not mathematically a 2 standard deviation, okay? It's too early in the morning for that stuff. All I did here is double the range. So if the range was supposed to be, you know, 100, I just took that distance and I went out one more, right? Not rocket science. So it's a generic way of saying a 2 standard deviation, but, you know, by all mathematical calculations, that's not a true 2 standard deviation, but it's close enough, right? That's 42.91, or we can just round and say 42.92. It's a key level. We've been talking quite a bit about 42.92 since last year, right? This is a level that you should have highlighted in like this big fat line on your chart, that every time we get near 42.92 that you recognize it as a key level. I don't think we're going to get through 42.92 this week. I don't think we'll close above it. Let's say it that way, because we could get there. We could kick the door, but I don't think we're going to keep it. Not for this week. Looking at the 10-day, we are above it. Yay. We got above it yesterday. It's a part of that wave that we're working on. And we're only up, you know, 0.9%. So not even 1% above the 10-day. That's not overbought. When it comes to the 10-week, we're still underneath it. And so as we drive up higher today and the 10 comes down to us today, we got to keep that in mind. Kind of adds to the idea that, sure, we could go up a little bit more, but we're getting into that territory where for the week, we've pretty much gone as far as we would want to see price go. If you use something like a regression line, take it from the highest point of this move, just drag it down. There's your Linreg channel. You got a fantastic TRB, unfinished business here, 42.86 or 42.85 right in there. First touch rejection, we would anticipate that there's still a lot of sellers sitting up here. And until they prove me wrong, until we know for sure, then that's what we got to anticipate. And we'll only know for sure if we get to that area and we don't see them on the dome and we work our way through that zone. Otherwise, until proven wrong, I'm under the impression that there's unfinished business here. This is a micro cup, so having a little bitty pullback would make perfect sense to put a handle on that cup. 50% of the previous day is 42.28. That would be a really great spot to pull back, catch some support, and continue to move up, which would also complete this little mini cup and handle. Doesn't have to happen today. Just some context on the really big weekly candle that we have. Generally speaking, in bad times, we get big candles. I know it's just a blanket, broad brush statement, but high volatility means big candles, right? So in bad times, big candles. So when we get one of those big red bars and then a matching big green bar, it's not necessarily some hoorah that we're headed to the upside. Okay, and there's been a lot of examples where we get 1, maybe 2 weeks, and then we chop about a bit and we continue to move down. I'm not bearish, just to kind of put that out there. I'm not bearish per se. I think, we at some point we have to turn around. It could be here as well as anywhere else. But this week needs to close. We need a new week to open, and we kind of take it from there. As long as we continue to go up, I'm willing to trade to the upside, but I'm not looking to build out long-term, buy and hold portfolios yet. But for anybody who's carrying heavy short, we might want to lighten the load a little bit, take some profit, tighten things up. Bitcoin is up more than 2% this morning, followed by semiconductors, the FANGs, emerging markets, so China, bonds, and tech. Communications, again, which is interesting. There was a lot of communications names yesterday that were doing really good, right? Comcast, Verizon, AT&T. Apparently, it bled over to today. Marijuana is still leading the pack, up more than 3% in both of the marijuana Bitcoin or marijuana ETFs, and then Bitcoin below that with emerging markets and semiconductors. It's not a full sector rally yet, but it's a darn good start. Looking at this, rather than naming what's up, it'd probably be easier to just name what isn't up. The VIX is down more than 2.75%. Nat gas 2.5%. Solar 1.25%. The dollar 0.5%. And all of that is really good, right? It's a really good start, and it meets that 0.5% profile that I use to benchmark whether or not we'd even consider something being up or down. Now, there's a lot in the middle that doesn't meet that criteria. So that's why I said we don't have a full house of every sector moving to the upside. But it's looking pretty good. And honestly, although this isn't a popular statement, we don't need them all. We really just need the FANGs. But things would go smoother, right, if we have the FANGs and then they have the support of everything else. So we want to see that rising tide. We want to see a solid breadth today in this move up. If you don't have that, kind of approach any upside moves with caution on your intraday trades. Watch the clock. It's going to be really important, really valuable to keep your eye on that clock today. Let's kind of open some of these up a little bit. So we got the FANGs, Tesla up the most, NVIDIA, Netflix, Meta, and then Apple at around 1%. Even, this thing hasn't even reported, and it's still got that kind of moves. That's pretty good. It's a lot of places, a lot of names you wouldn't see traded that heavy right before its earnings. but it is the darling of Wall Street. Keep our eye on that 50% mark. Oh, and we're above it. Hoorah, that's a half back break. The getting some news out of Europe. Microsoft is basically flat, giving it all away. We're losing our market dynamic this morning. That news that came out. There you go. Bank of England estimates GDP in 2023, 0.5%. Unemployment rate, 4.3. They raised rates by 25 percentage points. And that's what it took. There's already some discussions about Powell needing to raise rates. And I found that funny because, everybody's been pounding on them to hurry up and cut. And now they're saying, what are you pausing for, dude? You need to get ahead of stuff and cut again. So I don't, it looks like that's exactly what Bank of England did. And market so far doesn't know what they want to do with it. Notice we didn't really get anything out of the VIX on that, right? So if we were looking at this thinking, oh man, everything's changing. Yeah, not too much yet. The VIX hasn't even woke up. 2.85. We want to see that change at the very least if we're going to consider that this is a turning point. Yeah, Bitcoin didn't like it either. Qualcomm is up the most out of the semiconductors, and then ASML, NVIDIA, Taiwan Semiconductors, and AMAT. Well, those two just swapped places. SMH broadly at 1.92%. Semis are just lit, but AMD is not. So after that fantastic move yesterday, AMD is just chilling this morning. It's not down. It's just not up. And as much as that looks overextended, way beyond the move, right? We'd look at that and say, oh, in no way we could trade AMD now. It's already moved too far. I want to stress a note of caution for anybody looking at AMD thinking, oh, I'm going to short that sucker. I wouldn't do that yet. At some point, it's going to be a great short, no doubt. No argument from me on that note, but I wouldn't do it yet. So just start with yesterday's candle and consider shorting it from the high would be an LRE, 100% true. That's your cheapest risk. And if you can buy those puts while we're still going up, you'll get the best puts that you could get. But talking about the statistics of this trade being a winner by shorting it here. Tasty Trades has a trade strategy called the aggressive contrarian trade strategy. And it sounds just like it says. You don't wait for confirmation. You get in aggressively. You get in while it's still going against you. And it's all based on the idea that it's gone too far, too fast, and it's going to mean revert. And most of the time, that works. There's an exception to every rule. And I think it should start with, why did it go so far, right? So if you understand their earnings and why it has moved this much, you might get a better grasp of how much more it could move, what its new value is rated at. So maybe on this one, an LRE isn't so hot of an idea. But again, if shorting it here would be cheaper, the cheapest you could get. Kind of focused on this rally base drop with this liquidity zone over here, up around into that 110 zone. I like that area for a better short. The thing is, with options, you don't really need to wait for it to get there. You could sell some calls up there at the 110, 115 spread and, you know, kind of use that. Again, with a note of caution, this is like a Wyckoff style, even though it's not down and then basing and then up. It was, you know, grinding lower and then basing and now up. And that's a classic double bottom where we went just a little bit lower than the previous low, just like we're supposed to trap those bears before we move up. And then they get trapped in the squeeze, and it's a TRB setup, and a TRB owes us back to the top anyways. So I still think we're going to get to 1010, maybe, you know, overshoot that 110, but we're going to get tangled up into these sellers, maybe even into these sellers back here. I don't think we're going to get through there in a single shot. It's possible. And we have a market maker move this morning of $2 extra. So it's a $6 move for AMD today on the table. It doesn't mean it's going to give us a $6 move, just that it could do a $6 move. From where it's at now, right this moment, it could move $6. That's nothing for AMD. The Bitcoin proxies are a little shaken on that news, but they still seem to be holding relatively well. The China ADRs are still marching up. So we got BABA and Baidu. JD. Maybe JD ain't keeping it. It's trying, getting some dark pool prints. PDD. So like I said, a broad swath. We don't have all of the sectors, but we do got a lot of them. We need to keep them, especially finance and tech, but most especially just tech. Keep your eye on the clock. Watch this pair between the Dixie and the 10-year. We can see the Dixie again expanded lower. But where's our 10-year, right? We need that thing to get gone, go low. See y'all tomorrow.